Jim, it's so good to see you. Thank you very much for joining us today.
Steve, pleasure. Really happy to be here, and thanks for asking me.
Oh, it really is our pleasure. So let's jump right into it. Would you begin with a three-part question? One, who are you? A little bit about your background. And then the third part of it is, can you share a little bit why you care about sustainability?
Sure. So Jim Landau, right? Up until very recently, head of sustainability at MetLife Investment Management. Um, my real estate journey has been long and varied, Steve. So I started back in New York. I'm from New York in property accounting with Cushman and Wakefield, doing that for a few years and really great start. Really, I fell in love with real estate, commercial real estate, learned how to abstract leases, utility escalations, create the monthly management report. We were young. We all stayed up until 11 o'clock, working almost every night and then went out, so it was fun and exciting. And it was a great start to learn the nuts and bolts of real estate. Quickly got uh, recruited into Cushman Wakefield's valuation group, where I eventually became an MAI appraiser. And again, great background for what I've been doing ever since. Appraising property of all asset types in virtually every state in the US, going to local townhouses, local zoning offices, and registrar's office, looking up deeds on back then microfiche. It was really cool, looking for comparable sales for land sales for the Wendy's that was going to be built by the interstate, right? And everything and many similar properties. So again, great background in terms of the nuts and bolts of how real estate transacts, right? Uh, Moved from valuation into asset management, and I was an asset manager for over 10 years with Bentall Kennedy, now BGO, working on assets around the country. And then head of asset management for the Mid Atlantic region with MetLife, both at Bentall Kennedy and at MetLife. I was instrumental in building and running our sustainability program. About 5 or so years ago, that became my full time job, head of sustainability, because it became so important to so many of the investors in our funds and our JV partners, both domestic and offshore, many of whom actually had heads of sustainability. And when the money's got it and your service provider doesn't, it becomes a little uncomfortable. So that became my full time thing. But yeah, been a long career in real estate that's got me to this point.
And why do you care about sustainability?
Uh, I go out and I play tennis and I ski and I run and I'm breathing the air, right? I've got kids. Uh, uh, we're going to leave the world to them, and and global warming is real. Uh, we were at a get together here in DC where I live the other day, and we were talking about when actually it was a NAIOP meeting, and I was sitting with some folks from a local large commercial landscaping company, and they were talking about how their winters are only successful if there's a certain amount of snow removal. And that got us into talking about the last time they had a good successful winter, and it was 10 years ago. So uh, things are changing. And if we don't make a difference, if we don't contribute to the solution, who will?
I hope you found from your experience that it's also good business.
So as a former appraiser, right, I have a great understanding of cash flow and risk and the impact on value. And yeah, there's a big impact on value both on the revenue side and the expense side, right? On the revenue side, it's very hard, if possible at all, to understand the impact. But if I'm trying to lease space in an office building in downtown New York or DC or San Francisco or Peoria for that matter, and I'm competing against, and by the way, this is a very tough real estate environment. vacancy rates in San Francisco are 36%. LA, they're like 28, 29%. DC and many other cities in the middle of the market, they're 13 to over 15%. So there's a lot of competition for Class A space. Post COVID, things are tough in the real estate market. If I'm competing with 4 or 20 other buildings, I don't want there to be an excuse for that potential tenant to not choose my building. And they're looking for excuses. So whether it's a LEED certification or a decarbonization program or whatever it is, if that can help lease the space, market the space, um, uh, I don't want to take a chance that I'm not that my building doesn't check the box. Similar for multifamily residents. Gen Z, millennials, they're smart, they care, uh, they want to know where they're living, that it's going to contribute to health and not be a detriment. Uh, so yeah, and even uh, it's important to note, and a lot of people don't realize, it's not just your hold, your current 10-year hold. It's the next hold. If climate risk presents itself by way of higher flooding risk in 15 or 20 years, that's going to have an impact on your ability to sell that asset. And a 25% increase in the terminal cap rate typically on average results in about a $4 million decrease in your net present value today. So there's a lot of reasons, both on the expense side and the revenue side, how climate risk, doing the right thing or not doing the right thing, can have an impact on your value. And in a market where values are tight and low and competition is tough, I want to have my best foot forward all the time.
Thank you, Jim. I appreciate that. I wish we had more time in this interview to really get into the nuts and bolts of financing. I think it'd really be helpful to a lot of people to understand what their clients are dealing with and how the valuation works, and frankly, how it impacts especially service companies are in our industry that have to provide services to those buildings. But that's a discussion at another time. And for those of you listening in, Jim mentioned the lead rating system, and I have the pleasure of actually serving with Jim on the U.S. Green Building Council's Lead for Existing Buildings work group. And Jim is absolutely outstanding member of that. So thank you for your volunteering efforts and the things that you've shared with me. So let's keep going. Um, let's talk about sustainability trends. What are you seeing? What do you think's going on? Where's stuff going? What are your thoughts?
So it's interesting, Steve. Things have changed, but in a way, they really haven't. So the world of green real estate really started to come to focus for me and for the companies where I work around 2005 to 2008. That was really the first time I became aware of LEED certifications. For instance, back then we called it RPI, Responsible Property Investing. That moved to sustainability. About 5 years ago, that became ESG. And now it's back to sustainability for various reasons that we're all aware of. So, but at the end of the day, what started with certifications like Energy Star, benchmarking your property in Energy Star, pursuing LEED certifications, a focus on LED lighting for many years. At the end of the day, today we talk about energy efficiency less and carbon reduction more, but they're really the same thing. At the end of the day, the amount of carbon that your building generates has a direct correlation with the amount of energy that it uses. So energy efficiency is still really the key. That hasn't changed. Some of the terminology has changed, but making buildings more efficient is really the I'd say 20-year trend.
As companies, especially new to the sustainability issue or whatever we're calling it these days, as they're starting on their journey, what are your thoughts? You have a broad background in this stuff. And candidly, I'm especially interested in any thoughts you might have for smaller companies.
Smaller company, bigger company, my answer is probably the same. And it's a couple of things. One, data. right? It's an old maxim. You can't manage what you don't measure, but it's true. So you need the data. You need good data, particularly when you've got when it's an if it's an institutional investment. So you've got third party, occupants. You're not occupying it yourself. Um, uh, Writing in the leases that your occupant, if they procure their own energy, must share it with you. Um, Having the data, benchmarking it in a system, and I strongly recommend to anybody, large or small, that they use the EPA's Energy Star Portfolio Manager. It's free. It's a great tool. It's been around a long time. The EPA is constantly upgrading it and revising it and improving it. They're in a major upgrade process right now. So use that tool, have the data. Once you've seen your data and once you've got the data and you're benchmarking it in a program like Portfolio Manager, um, then you can look at it, you can analyze it, you can see what your trends are. You can work with your building occupants. And if you occupy the building yourself, you can work with your facility staff. So uh, it gets, get the data. That's number one. The other big thing is understand your climate risk. Uh, Historically, that just meant looking at a 500-year floodplain map. There's a lot of tools today to measure physical risk from climate change, flood, storm surge, high winds, heat, cold precipitation, wildfire, et cetera. There's a lot of tools available. Most you do have to pay some service fee for or prescription subscription, but there's others that are rather inexpensive or maybe even available at no cost at all. So having an understanding for where you sit and where your exposure is, both today and 10, 20 years from now is important.
I would think that not only is having that information important for people who own the buildings, but in our industry to understand the risks for our various clients too, right? So they can actually help them and develop programs to help mitigate or reduce risk from those kind of events as well.
Absolutely. I agree.
Um, so last question for you. Any additional thoughts or anything you'd like to share with the group today?
One of the things that you and I have talked about in the past, and we've talked about on the lead committee meetings, um, but regulation and legislation are coming at us quickly. For quite a while, in many U.S. jurisdictions, at least, there was a requirement to benchmark in Energy Star. So, but that's a first step and not that difficult. Then disclosure became a thing, and now the trend is building performance standards, or BPS, BEPS, what the industry calls them. New York's Local 97, Boston's Birdo, Washington, D.C.'s energy law, the laws in Denver and Washington State, and a jurisdiction coming to you soon. There's a coalition of BEPS, building performance standards. It's approximately 40 cities that have committed to writing a BEPS law. And in the current IRA bill, there's considerable funding that has been allocated already to jurisdictions to help them build these laws, because they don't just have to write the law, they have to establish procedures and departments within the city to help their clients, help their taxpayers achieve these goals. The goal is not to pay fines, it's to make your buildings more sustainable, more efficient. And if you don't, there's a potential that you're going to pay fines and penalties, and they're real and they're starting in some jurisdictions already. So getting the data is important, but then knowing how to use it, knowing what your exposure is, and working with the appropriate providers and consultants and your own staff to figure out how to mitigate that risk. That's the big trend today, really.
Not only do we see those kind of laws and requirements happening in the US, but certainly they're happening around the globe as well.
They are at MetLife in our debt portfolio for the first time in 2025. We need to report to the European Union under their CSRD regulation. SFDR has been around for a while. Yeah, we could go through the whole alphabet soup of regulations both here and abroad, and it would take a while.
Indeed, and it certainly seems to be a thing of the future, or actually the thing of the current.
I agree. It's here. It's here now. Yes.
So, Jim, I wish we had more time to spend with you, perhaps another time, but thank you very much for spending some time with us. You're awesome and greatly appreciated.
Steve, thank you for everything you do. You are an inspiration. So thank you. I appreciate the opportunity.